What up to the outliers? And I have a question to kick us off for today. I'm actually doing a little bit of homework for a video that I'm putting together for you all on risk management and options trading. And this is one of the studies that I am referring to for this. And here's the question for you guys. Why do individuals keep trading despite losing? Why does that happen? And I'm curious what you all think about that, because it is a quantifiable thing we can see is happening, which confounds the living shit out of me. And there's really one thing I would probably point to as the solution for that. However, I'm guessing you guys probably know exactly what I would chalk it up to. To me, it comes down to ego. I really think that's what it is. But there are varying levels of that, because here's the thing is that if people continue to lose, they still have to have money. So I actually, Ken in the chat threw out that he thinks they might be gamblers, and they could be. I'm sure a subset of them are. But the problem with gamblers in general is that they tend to get to a point where they're illiquid. And in order to trade literally anything, you actually have to be liquid. So unfortunately, I think a lot of those people probably fall into that really, really small subset that I talk about on my, let me see. I actually think I have it on my website. Yeah, here, this is it. So from my website, I include a handful of pieces on trader success and profitability. And essentially, one of the really interesting categories of people that exist are those who actually continue trading beyond this magical 5-year mark that still are not profitable. That to me is the most fascinating cohort out of any of these people. The fact that that is a thing is wild. So Moda says, are you going to quit dating because you get rejected? Which is a funny analogy, but it unfortunately doesn't actually apply in this circumstance at all, because essentially the more apropos comparison here is like, are you going to continue reaching out to Giselle because she broke up with Tom Brady to get with her, as compared to dating somebody in your league? That's what it's more akin to, because you can stop trading at any point in time, but still invest, and you can pivot to buy and hold, which outperforms most people. So that would be the equivalent of your example of saying, okay, Giselle might be out of my league, so I'm going to approach somebody closer to my league. At least that's the way I think about it. But to your point, you also can't stop trading each time things don't go well. That's for sure. But I still am fascinated by the number of people that I will talk to that they are completely disillusioned with themselves. And it really is a fascinating psychological experiment. Even the number of people that I talk to, that if I ask them, what is your X year trading performance? They'll maybe say something, they'll say a number, but then if I actually went through the effort of like asking for receipts, like show me your brokerage statements, let's actually look at this. My guess is the vast majority of people, if I ask that, let me see the brokerage statements, their assessment of how they're doing probably is different than what we would find in the brokerage statements. And I think that's just because so many people have a problem reconciling what they're doing versus what they want to happen. So way more to come. As I've mentioned, I'm working on a video that dives pretty deep into that, which I think will be a fun one, because I think there's a lot to unpack there. But I bring in that all up because if you want anything specific, or you want me to cover something specific in that risk management for options traders video, let me know. And then I'm happy to include it. We got to say hello to everybody. So we do have Samoda. We got IR2 Bad Tom, Tommy, Anthony, Truck and Plane Hater. Good to see all of you hanging out. It looks like Shrey J is broke the sacrilegious, or I guess the religious, and committed sacrilege and decided to go long hood. So that actually, for me, I think might be enough of a catalyst to fade it. Where do I think we can get to the downside here? Yeah, I mean, by all accounts, the chart does look bullish. So I don't hate that. I don't hate the analysis you've done or the timing of the entry, to be clear. But I cannot express the depth of my residual hatred that this is hood and I hate hood and really just would love that company to crash and burn. There are a few things that I have just kind of a psychotic hatred towards, and this is one of them. So I still think I could short it. Still think it could be done. I'll take a look at this thing tomorrow, and it might not be any sort of impressive short, but I think it could still be done. Treasury says, hey, I'm just following my training and trading what's in front of me. Yeah, well, sometimes you have to adopt a psychotic hatred as well, and you have to throw that into your training. So they're like this. This is a primary instance of everything about this to me would lead me to be bullish. How did it do for earnings, actually? Let's take a look. It beat on earnings. It doubled and then some. And then all of that aside, I still hate it. It is ascending moving averages that look stupid to me. The 50-day moving average is positive sloping, which is dumb. It has massive breakout confirmation volume here, which a bunch of paper hands, I bet. And then it has like a little silly one-sided volume today. Look at this candle. It essentially hit down there and it just shot up the rest of the day, which is just, again, just disgusting. Everything about this tells me it should be long until I look at the ticker, which tells me it should be short. Period. I hate Robinhood. J5D says, why the hate for hood? I think the shorter answer to that would be like, why not the hate for hood? I could get through that in a succinct period of time as compared to like expressing my deep hatred for what they are as a company, what they do as a broker, how they've essentially tried to gamify it. They've provided access to people, which I actually do like, but then they turn off essentially people's ability to trade because they're illiquid and behaving irresponsibly as a broker. They're not clearing trades effectively. They give you terrible fills, but they show you no commissions. I literally just hate everything about them. I hate the name. I hate the way that this says Robinhood MKTS. I hate that that says MKTS. I just hate that. Everything about this is stupid. I hate them. Let me zoom out further. Yeah, I hate them. Look at this. They fell from 85 and hit a low of 681. Nothing like building value and then just plummeting. Actually, let's see. I don't even know what that return is right there. Let's take a look. So 85 was their high. Their low was 681. A good old 92% decline. The good old 92%. Everything about this, I just hate them. I don't know if I've expressed that adequately at this point. I was going to talk about my trade in AMD for a little bit, but I just want to reemphasize that I really hate Robinhood. I just hate them. Okay. Now that we got that aside, I do have a kind of standard live outline for us. The main thing to highlight here is that Friday, I'm not sure if it'll be a live stream. It definitely won't be at 5 p.m. I know that, because I'm going to do the Humble Trader podcast around then. So I won't make that. I might try to do something a little bit earlier in the day, but that's really the only main update there. And then I was going to do a standalone video actually for this AMD trade, but then I realized that the trade is already getting kind of stale and it would be coming out a little bit late. So I figured I would just throw it into a YouTube live session. And I actually think this is probably a really good way to review these with you all, these kinds of trades, because there's really nothing that remarkable about it that deserves like a standalone video. But I do think that there's some technical details that will probably be useful. Samoda says I should interview James Boltard. Is that like a kind of name am I looking at? Let me see. James Boltard. Unedited market commentary. I don't get it. I don't know anything about this guy. He shows his book. What book? Like his, is he an author? Or you mean like his trading? If he shows his trading, it tells me everything I need to know about it. But I'll take a look at him. His portfolio, yeah, that tells me everything I need to know right from the jump. However, I'll take a look at it. Even from like a creator perspective, but like there's, yeah, well, I'll take a look. But let's discuss the trade in AMD. So for those that don't know, back on the 1st of April, AMD was trading around 181. This is what the chart looked like at the time. And I had chosen to open a 2 lot of the 19 April 170 puts collecting $1.95. Why a small 2 lot? Well, because when I was putting on this trade, it fell in a weird spot because I like AMD and I actually think AMD, let's get hood off this. There we go. And I actually like AMD. I think AMD is one of those companies that long-term will continue to deliver value. And even though they've had a pretty massive run, a pretty significant contraction, I still think that they're in their growth phase, although I do think it's slowing down. All that being said, I like it as a general play on some of the broader current market themes. So the reason why all that matters is because I started with a $75,000 allocation for cash secured puts. So in this case, I started with a 2 lot because I was simply trying to keep the trade small enough in the beginning because this is not a super bullish arrangement. And as you saw in the chart that I just referred to, the more live chart for what it did, it happened not to be. So I started with a light allocation with the expectation that I would manage these as naked short puts as long as possible with an emphasis on managing basis. However, if it continued to decline far enough, I would have happily redeployed the rest of the total allocation for the trade in a covered strangle is what it would have turned into. So this is a weird trade. It started as cash secured puts in kind of this infancy stage, but for the long-term roadmap of the trade, I had the consideration of it morphing into a covered strangle. Depending on how things looked, I still will always maintain exit levels for stuff that just looks really bad. But for AMD specifically, if you notice on the loss management side of this, what it came down to is a fundamental change. If AMD price fell from, where was it at in this? If it fell from 160 to 130, I still wouldn't really care that much for a much longer term play. I actually would probably add more to the position and might even allocate more to it. But depending on the reason that it made that drop, that's what matters to me. So that's why I didn't put a specific level on the chart, because for me, the loss management in this was entirely predicated on the fundamental picture of AMD. So even if there was a massive change, maybe they had a factory that they're trying to repivot and they're trying to tap into a different market, and that caused a 5-point drop, I still would probably have exited because I don't want to ride that company through. Although it might be productive, that's not the original thesis from what I had. So that's one of the different things you will hear about this trade compared to more of my systematic stuff. And the reason why this becomes more qualitative, if you'll notice, is because it's a covered strangle. This isn't a diagonal. If it was a diagonal, the overall thesis typically is shorter term time frame. So it's less quantitative in this scenario, more qualitative. But if I'm trading something like a diagonal, directional stuff, that's going to be far more quantitative in how I'm deciding where I'm going to exit and enter and exit. So that's that. So I already gave you the sizing. So the original outlay essentially was half, a little less than half of that. And the scaling rules I instituted was essentially a review at 3% move up or down. So if there was a 3% up or down move in the stock price, that would necessitate me looking at what's going on, which this was actually a big day. And I conducted a lot of analysis on the 4th of April because this was a big drop. And if you'll notice, there was no earnings, and this clearly was pretty specific to this. So this necessitated a pretty big review of the product, how it was trending, but overall it still looked okay to me. So this was the original trade. Okay. Then on the 15th of April, AMD was now trading around 159. This represents essentially a 14% drop in price from where I entered. And I chose to conduct a roll. And I bought to close at 1075. So that represents a negative $2,150 outflow. And I sold to open, same size, two of the 31 May 160 puts for 1150, collecting 2,300 bucks. So in this case, what the overall emphasis was placed on basis management. I made a 10-point basis change, moving from these 170s to the 160s. The fact that I got a small credit for it was kind of just icing on the cake. The main thing I was looking to do here was adjust the basis as this thing was clearly moving down in relative stair-step fashion. So I entered here, it was basing, popped above the 50-day moving average, had 2 days, just good, solid, positive volume up above, and then big old drop, leveled out, couple more drops. So to me, this was opportune time, make the adjustment, which is exactly what I did. So by doing this while it was making down moves, one of the benefits here is implied volatility expanded, which allowed me to get a little bit more of a credit. So in this case, obviously the options were pretty deep in the money, still able to get a decent roll out of them without going super far out in time. As you know, I typically try to go not super far out in time so I can try to follow this down move as it's unfolding. And if I need to go out another week but get another $2 basis change, something like that, I will do so. And in this case, didn't really have to. So at this point, we are at a net credit for the roll, 540 bucks. Total credits received at this point, obviously adding these, taking out the total debits. That's what these two different numbers come from. So the net credit up until this point in the trade is 540 bucks. So essentially not worth much time or effort at all. Most of the time and effort was placed into making a big basis adjustment. So that's that. Then we have kind of the next round of adjustments, which happened about a month later on 16 May. And AMD rallied back up to 162. So this represents a 2% increase in price from where it was on 15 April. And overall, still down about 12% from where I entered. So on the 16th of May, I bought to close these 31 May 160 puts for 287. So you can see I obviously took in a decent amount of that premium. And then this resulted in a total net debit so far in the trade of 34 bucks. So looks like Tommy had a question, and so did Tom. Okay, so Tom says, why 3%? 3% gives me time. I'm not hovering over the trade, but if something is moving up or down 3%, then it makes me curious as to what's going on, what the trend looks like. So it's not big enough that a trend is probably deep underway at that point. So it's kind of like an inflection point. That's why 3%. Tommy says, information technology sector strong, semiconductors subsector strong. Thoughts on keeping a covered strangle or increase allocation? Yeah, so I'm not going to increase the allocation on this. Actually, the last trade I have, which I have on right now, is just a one lot of the 21 June 155s for 335. So essentially what I did in this case, because it's still just starting to do what I want, and this gave me another $5 basis adjustment for a small net credit, and I took half the size off. So it's still flagged in my book as a covered strangle with an allocation. However, I'm waiting to see essentially how it chooses to behave. It's getting to a point where it's starting to get somewhat interesting. Near-term resistance obviously is right about here. You can see that we had 1, 2, 3, 4, 5, 6 closes around this volume node here. And I mean, it's butting right up against it here. So this is kind of the first level that starts to get interesting to me, to essentially do anything resembling bullish in the position. So I switched to defense as this thing made kind of that massive move against me. So I wouldn't kind of axe out doing any sort of increasing allocation to it, but not at this point. It needs to behave. Big A says, at this point, what's the criteria to justify that being the best place for the money right now that it's moved down? Or are we on individual goal? Yeah. So you have to ask yourself that question, but it's always in context, right? So if today I had 0 DTE SPX options on and one of the strikes moved, I think I entered it at like a 12 delta and it was at like a 29 delta. Was that the best place for my money at that exact point in time if I was entering a new trade? No, I wouldn't want it to have been at a 29 delta. Does that mean it's not viable as a trade from when I put it on over the life cycle of the trade? Sure, it's still completely viable. So for me, this didn't eat into capital that could have gone somewhere else. If I was trading a smaller portfolio and this then became a question of, am I going to trade the covered strangle in AMD, where over the course of essentially a month and 2 weeks, so I guess I could have just said 6 weeks, and I'm going to walk out with negative $34. Is that the best place for my money? If this was taking capital away from doing something else? Absolutely not. This would have been cut a hot minute ago and we move on to something else. But because I do enjoy some of the economies of scale that come with different size portfolios, it's not really so much of a problem for me. I'm still using and deploying the rest of the portfolio in line and able to return what I want. So in this case, the trade started not agreeing with me. However, that's part of trading. Not every trade is going to go immediately in my direction. So to your point, that is a massively important question to ask. And as you can tell, it's a nuanced question. It really comes down to what's happening in the market at a given point in time. So for example, from an underlying fundamental perspective, I don't think AMD changed that much. Even its earnings didn't look that bad. So to me, this is the market being the market. It goes two directions, but I still felt confident in the product. And again, I still do. As this thing continues to trade, I have no issues with scaling more capital into this because I do like AMD. It's a solid product, especially from a covered strangle perspective, because it offers decent premiums on both call and put side, and it's in a solid performing sector with a massive just environment change at its back through AI integration. So this is something that I sized it small enough that if I held $75,000 of AMD for 2 years, I don't think I would be sad about it. is really what that boils down to. So to me, this is still a completely viable opportunity. Yeah. Tom says, is that specific to AMD or general guideline for you? It was specific to AMD in this case, but in general, I'm going to set a range for scaling based on how much capital I have left. I'm going to use what I think about the broad market, because again, this doesn't mean that I'm going to add or going to remove when it's up or down 3%. It means I'm going to look at it and make a decision based on scaling. So I typically will set scaling. It's generally going to be less than or equal to 5%, I think is a fair general guesstimation. Now, the periods that starts to change though, is let's say you're trading a covered strangle in something like IWM, the market's collapsing because it's COVID. And let's say you started using your silver bullets that are allocated to that trade, then I might still look at it, but the times that I would actually enter more capital on the way down in that position, it's going to open up pretty significantly. Otherwise, you're going to run out of money too fast. So this is essentially set for when am I going to review scaling? And then whether or not I choose to actually scale will depend on my profit and loss target. So in this case, the original target I had to the upside was a break above the 186.02. That was the original. I wanted it to break up above that. I thought that based on the original trajectory that I was seeing here, that we might see a pop of volume. We did, but to the downside. But if that reversal went the other way, that would have been great. That's why I entered this with short puts and not long shares, is because in this case, I'm prospecting. I'm not looking to commit a bunch of capital because it's kind of at what I would consider to be an inflection point. And in this case, it started to run up against me. But that's why I use 3% in this case. It gets me to look at the trade when it's making moderate moves. I'm not looking at it every day. You don't have to. But the way that feeds into then scaling decisions is slightly different. So if you look at the 5-day average daily range in it, it's 3.7%, and that includes some pretty big days and some gaps. If you look at the 12-day average true range, so obviously including some of these overnight moves, but over a longer period of time, it's only 3%. So if I think about where this thing might go on, like within a 1 standard deviation move, it's what? It's like 2.66%. So it's on a 1 standard deviation frame. I don't have to look at it every day if I don't want to, but I would more likely than not be looking at it at least every week based on the scaling review. Tommy says now above the 50-day MA. Yeah. So, and it crossed above twice, which I like. I think the moving averages are starting to reorganize, which I also like. I think it needs to get above this 169 handle. And the reason why I think that 169 handle matters is because that's where near-term resistance looks like. Samoda says, where'd you pull the standard deviation from? I have a standard deviation tool up here. So the daily 1 standard deviation move, plus or minus $4 weekly, and then monthly. So that's where that's from. So that's where we're at. And I still have this trade on right now. So I can't tell you the last time I traded a 1 lot in something, which is actually kind of fun because I feel nothing. This thing could go to 0 and I genuinely wouldn't give a fuck. So it's kind of fun to just see what it does. If it starts doing what I want it to do, I definitely would start moving this into a more meaningful position. That's no doubt. But right now it is in the process of normalizing, see where price wants to go in AMD. I'll get out of this thing for a profit, at least to compensate for some of the time I was in the trade. It's not a good return on risk, but overall, this is what we're working through right now in AMD. Thought it was interesting. So that's that. Thanks for coming to my TED Talk. Back over to the live. Samoda says just enough to pay attention to it, maybe. Yeah, yeah. I mean, the trade has the potential to make like $300. But the thing that I like about those trades, and the reasons why I use them for kind of our purposes when we're doing the live sessions and stuff like that, is because I actually do like them for a thought exercise. And as you all know, I have absolutely a preference to talk about shit that's not going well, because the trades that go well, there's not much to talk about. It's predicated on a well-built system, which, I mean, again, not to be like super conceited, but like, I know my stuff is well built. So that's not necessarily super engaging to me that, oh, okay, I built something that's working and it's working. Fucking who gives a shit? It's the stuff that's not going to plan that to me is way more fascinating and way more intellectually stimulating, especially that move in AMD. I found that really, really interesting. That's not a small move. AMD, I think at its worst, dropped below 20% from where I entered. That's a meaningful change. And I was looking at why I was doing it, and like standardized market fashion, some of it looked to be like institutional price movement, but some of it genuinely, I couldn't tell you definitively why the fuck it was doing what it was doing. And again, anybody that overly sells how much they can explain things like that to you, they're just bullshitting. We can all come up with guesses, but obviously the move post earnings, that's easy to identify. It's clear, discrete. You can clearly see that, right? So if we grab AMD again, this move post earnings, very, very simple to explain. Very simple to explain. Even some of these bigger, larger down days were simpatico with the larger market. Okay, can explain those away. But seeing something that consolidates here for 5 pretty inside days and then just gaps down, why? Why? And that's the point of markets, though, is that they're constantly attempting to find price. And that's what yields opportunities. Because AMD, even though it has a lower implied volatility percentile, it still has decent IV. It's at 42%. So it's still paying pretty well relative for what it is. So yeah, that's AMD. All right, let's talk about what we got this week. And it's a bunch of Fed speakers. So today we had Bostich, Waller, Barr, Jefferson, Mester. Then tomorrow we have Waller, Barkin, Williams, Bostic, Barr, Collins. So today and tomorrow, just mostly Fed speakers. Then on the 22nd, we have home sales, crude oil, and then specifically the FOMC meeting minutes. That'll be at 1100 Pacific time. And then the 23rd of May, jobless claims as always. And then big inflation driving numbers, services and manufacturing PMI flash. That's at 0645, so right after the open on 23 May. So be mindful of those along with new home sales. And then the 24th, more Fed speakers, durable goods, and then Michigan sentiment. That's probably not going to move the market that much, although it still will be interesting to read through. So that's what we have from there. Now let's take a look at some other general news. IR too bad brings up NVIDIA earnings. Yeah, let's take a look at what we have on the earnings docket. I know there's a lot of excitement about NVIDIA earnings. So today was PANW. I actually think we had somebody looking at trading that from the Outlier Pro side. So let's take a look at what it's doing. Big move. So close 323, and right now it's trading at 295. And what was the implied move? Implied move was 9.2%, and the average actual move is 10.4%. So this is close to that right now. We'll see how that accelerates tomorrow. But I remember, I forgot who I was talking to about it, but I let them know that this actually isn't something that I personally would trade, because 6 out of the last 12 earnings releases, it has just flown off the handle. So because of that, it makes me not necessarily ultra interested in it for an earnings play, but well, you know, it's there. Then tomorrow we have Lowe's, Macy's, Urban. Then on Wednesday, we have Target, TJX, Nvidia, Snow. We could take a look at Nvidia in a second a little more closely. And then on Thursday, we're getting to the end of Intuit, Workday. Yeah, there's some things you could put trades on for earnings, but not a whole lot. Right now, my earnings book is super small. It's probably less than, I would say, 6% of the total portfolio allocation. I have money really working in most of the core and speculative coverage strangles as of right now. So we are not quite full port, but near it. As you can see from my utilization, I'm up to 94% utilized. So we are using the vast majority of the account, and I probably expect to remain there at least until we start to see a bit of a change. The TQQQ coverage strangle that I have on is performing well. I actually added more shares today, buying at near-term highs is what I was attempting to say. And let's see if we go out. Yeah, oh, I meant to hit 5-year. So this is kind of where I've found near-term resistance using this longer peak that we saw at the end of 21 into 22. So I'm keeping a close eye on it. And right now I'm just playing standard trend following. I am tightening up the stops more and more. I'm not going to use the 50-day at this point. I would want to capture profits before that. And then I will just rotate back into the coverage strangle whenever it is. Honestly, right now, mostly what I'm doing in TQQQs is fighting the short calls that have fallen in the money, which is easy enough. That's not really that big of a deal. It kind of make it sound more dramatic than it is. Again, it's not really anything that's too complex. Essentially, we'll just continue to roll them out and up until either I can do it no longer for a decent amount of money, or until I feel like it's time to just exit the trade, at which point I would. But right now I have short the 31 May 60s and then the 14 June 64s. And I have only a couple of the 31 Mays. So that's small enough that I don't really care. I can always add way more to that to improve my basis on the short calls. So yeah, that's all there is there. Now, as promised, let's take a look at some Nvidia earnings. And we are flying near all-time highs. We are hanging around this near-term resistance zone pretty definitively too. It looks like to me last earnings came in almost $1 better. That's crazy. That's just, honestly, that's just impressive, because that's not an insignificant move, especially in something that's this size. I think that's one of the things that can be forgotten sometimes when we're looking at Nvidia, is it's moving like it's a little tiny baby stock. But, you know, in case you don't remember, it's actually not a little tiny baby stock. It's a pretty significant stock. So I find moves like this interesting pretty much because of that fact. But I think if I were to guess, positive drift being priced into the options, which we'll take a look at in just a second. Let me take a look at its previous earnings. Yeah. So out of the previous 12, and I mean, we can look at it over here too. Go to earn. So to the previous 8, it's had 1, 2, 3, four instances where implied was exceeded. But if you take a look at the price movements on those beats, bullish, price beat, still bullish, even though it's a big red candle, still up, gap up, gap up. So what I'm highlighting is I see mostly drift to the upside in previous moves. So now we can take a look at how people are positioning. And so right now I'm just looking at the order book to see how people are entering. There's a bunch of just small one lots. We don't really care about those. People are paying up for the IV. That's pretty crazy. Now let's take a look at skew, slight call skew, not heavy, very much slight call skew. And we go to volume. Much more calls traded. No real surprise there. So the options markets loosely look like they're pricing in a beat to the upside. But in this case, it's kind of hard because the skew is not big enough and there's a lot of people trying to trade this, right? So like all of these small positions, these one lots, these two lots, you can't read too much into those because that's not institutional positioning. So you kind of have to filter this by way more sizable positions. So even a 10 lot is, in my opinion, small for this, but we can start by looking at where we see 10 lots and then see how big the centralization of contracts is above that. So I see more 20 lots popping up. So we'll look at 20. And then let's look at 100 quick. And let's see what they're doing. So this could be hedging activity, buying the 765 puts at 80. So it's kind of like a cheap entrance. But one of the things you can do is actually read through this and you can figure out where the net positioning looks like, which is actually pretty cool once you kind of get a read on how to read it. So these are pretty expensive out in 31 May. So another thing you could do to kind of make this a little easy is to just look at the upcoming series. So this is all looking at 24 May now. So like this is institutional buying. And you can see it because it's multiple fills of the same size, very, very close time frame to one another. They're spreading it off for, who knows, can be a million different reasons why they would do that. And then same thing here. 1300s, 1300s. And you can see this is an even size. It just got split up into two different orders. Yeah. So overall, to me, it looks like positive positioning for NVIDIA earnings. We'll see how it goes, but I'm definitely excited to see what that turns out to be. If you guys have anything else that you want to take a look at, now would be the time to throw it into the chat before I wrap us up. And in the meantime, we'll take a look at some news and see if anything here looks interesting. In case you didn't know, we did have, I don't want to call it international incident because that's a little dramatic, but we did have a helicopter go down in a fairly suspect manner. I don't know if you guys are familiar with that. But this is from today. So there was a helicopter crash and he was killed, which is kind of curious. Angel says Bitcoin all-time highs by end of day tomorrow. I mean, I don't see it. It's Bitcoin, so who knows? But I mean, as I look at this, I don't see it. Notice, like, this is still strong upward drift, no doubt. But for it to close this gap and get above 74, 420-ish, that's not a small move that it needs to make. It can make that move, to be clear, but it needs to be outside of one standard deviation at this point for it to happen by the close tomorrow. So for that to be the case, if you look at the chart and the way it's behaving here, compared to something like here, much more magnitude. This was flying off the handle for, whatever reasons you want to assign to it. But from a price action perspective, this is just moving massively. This is still moving, but not to the same magnitude of this. And the reason why I'm making that comparison is because it would need a pretty solid move before the end of the day tomorrow to close above all-time highs. But again, it could. That's just kind of what I'm seeing and why I would doubt it personally, but it's entirely possible. Tommy says Ethereum dragging up Bitcoin. That could be part of it. I don't know actually much about the relationship between the two. I don't know if you guys have covered that too much, but I haven't. I haven't done any sort of deep analysis on the markets between them and how correlated they are. But that is an interesting highlight. I personally am curious about it myself, but I'm not sure exactly. I do think, Tommy, your comment on the conversation around ETH ETF, that would impact this just from an adoption standpoint. And I think that definitely would carry over just a bit. However, looking at the way that Bitcoin is still performing and it's maintaining its strength at this point. We went through obviously a pretty crazy cycle where price was just wildly swinging, and it's still massive swings, but we were getting way less volatile on a relative basis than what we've seen over, the last forever, essentially. This looked pretty mellow, but this looked like it was being suppressed quite a bit. The candles are still really, really big, but I think the use case for Bitcoin is so fascinating that you kind of can't not pay attention to it to some degree, and it has a lot of wind at its back. So I like the cryptocurrency from here, but I actually don't even know what my Bitcoin is doing. I'm sure it's up, but I just don't know how much. That's kind of the fun part, especially because if you own the coin outright and I'm not really trading it, just kind of pop in every once in a random while and see if I'm rich or if I'm poor. And the fun part with Bitcoin is you really don't fucking know when you open it up. You just have no idea. Kind of fun. Cap P Stone, welcome. Cam, shit, I said Cap, my bad. Cam says, I recently had a friend try to push me to make some option trading. Really new to it, able to point you in the right direction. Yeah. I have a couple of videos for you. I'll send you one that's probably the simplest way that I would start, especially if you're like brand new. But the long and short of it is I would not rush into it. There's no reason to. A lot of people think that if you start trading options that you're just going to kind of start making a bunch of money super fast, and that is essentially not how it goes. You can make a lot of money trading options. I have, but it takes a hot minute to build the requisite skill set, especially that's sustainable. That's one of the tricky parts for new traders, I think, is that sometimes a new trader will find early success when they're trading options, and they'll confuse that with this is now how this goes. And I think that that just creates a massive, massive problem for them at some point, typically not too far down the road. But the market can absolutely provide an accommodating environment for extended periods of time, really, before you start to see a capitulation. So yeah, I think check out that video. You should definitely join the Discord. There's a link in the video description that you can hop in. But Angel says beginner's luck is the worst for new traders. I literally couldn't agree with you more. Beginner's luck is absolutely abysmal And it's so confusing. And I actually think what might be even worse than beginner's luck, to kind of pile onto that, is intermediate luck. And the reason why I think intermediate luck is so dastardly is because at that point, people think that they've put in enough time and effort that they kind of expect to see some of those results. And the fact that they're expecting to see those kinds of results then justifies what they think is happening. So somebody will think like, oh yeah, I've been working really hard and I've been studying a lot. I've been doing this for 3 years. So now is my time to shine. I think I got this figured out. I'm good. And then they typically will step right into the Dunning-Kruger effect at some point, which I actually don't know if I added that graphic to my website. I hope I did. Let me check real quick. Oh, that's kind of a bummer. I need to do that. I made a graphic for the Dunning-Kruger effect because I obviously talk about it all the freaking time. You guys are probably exhausted from me saying it so much, but I genuinely try to reiterate the messages that I think are important for you guys to be aware of. So yeah. Yeah, of course, Cam. Thank you for stopping by. We do these every Monday, so come back whenever you feel like it. And then we'll see you in the Discord. I hope all you guys have a killer week. I will see you guys, the Outlier Pros, on Wednesday, and then we'll see what Friday looks like. TBD. I will be in Vancouver linking up with Humble Trader to do the podcast that she does. It'll be my first in-person podcast. So we will see how bad I can fuck that up. I imagine pretty good. So fingers crossed. All right, you guys, have an awesome week. Be an outlier. See y'all later.